Welcome to TradeTheMBI.com. This is John. This report is for the 14th, day before tax day, and well, let's talk about the action. Let's go straight to it. This happens to be just all the high flyers and just some general futures and stocks in between. And not bad. Most of the dailies are all in sell signals. You get some bright signs from some of the earlier stuff, but when we get to some of just the daily charts here, yeah, they're all pretty much the same. It gets to be real fun when we go to like the Dow. Look at that. Out of the 30, what do we got? 1, 2, 3, 4, 5 of them that have even just 2 in a buy signal, one with 3 in a buy signal. Go figure that. Let's look at the S&P. Yeah, for the 100 S&P, I think there's the same number in a handful out of the 100 stocks. Look at that. That is some beautiful ugliness. And for the NASDAQ, a lot of purple and dark red for sell signals. Isn't that fun? That's a lot of ugliness. Now let's go to the chart, because what did we talk about? Well, yeah, I know we'd been talking about the cyan, positive moves from there, but then we looked at this pivot, which is very similar to what we saw back over here, where normally when you get moving in that direction, these cross over pretty quick with the green. And when it didn't take place, when we were watching the pre-market setup that was already going to tilt lower, it was mentioned, time to buy a put. And sure enough, the market was pretty accommodating, giving the opportunity to do that. And we were even expecting that the market would go to the pre-high levels that we talked about. And I mentioned too that if it broke down, we were going to take out the lows, and we did that before. And then we were expecting today to be just a little bit more of a flat day in between, and it was really working out that well. And I'll show you what happened intraday to where it sort of fell apart a bit. And those readings are still indicating further decline, though the extreme, not bad. The fact that we're staying above the red line down here with all the selling that is taking place means that there's a little bit of buying taking place within these. And the whole point was you want to break these lows to test how much supply is in there. And once you know, then you can also see amount of buying going on. And this was perfect because it just clears out all the people who were in everywhere going all the way back above this. And in fact, on the other chart I had, I put down what the, let me squeeze this one because we marked the line at the start of the year. And it's all the way back right over here, I believe. So you had the open right there. Color it white. So all that bullishness wiped out. I mean, it's not the first time we were below, but here it is. And the question will be, are we coming back down? You don't have any retrace need for back to that 17 range, so no point in getting that hyper excited over it. Certainly, NASDAQ and this spread that I keep talking about right here, where you get the gap between the steel and cyan, between the other three colors, and they're below the -7, is always bearish. You're making lower, well, if that makes a lower pivot coming up at the beginning of the week, look for a little bit further down. So nothing you can do. Now the Nasdaq's broken down in relation, and it's interesting because when we look at the YM, it barely broke out to its new highs, and it hasn't quite taken out the low point down here. So there is potential for a little bit more downdraft for the Dow compared to the others in general, and we saw it on that chart. It was pretty ugly, but still, there's not as negative move yet, because we're seeing that still well above the red line. That means a lot of people whose paranoia is getting out of hand with comparison to what's happening with price. There's always the Chicken Littles of the world, so you've got to ignore them, because it's not what the readings are pointing out. We would have seen oil here drop plummet well below this if it was a significant concern. The fact that all it has to do is replace that positive extreme down there at 36.90, not that far away from it, but certainly by no means showing that you're going to end up with this ultimate collapse, because with oil holding up, of course, oil wasn't even supposed to be near these levels from what you listen to all the people talk about, excess supply, yada, yada. I mean, there's still a growing economy, which means you're going to have increased demand on it. Now, of course, when things go down a little bit, you get everyone's, the Asian, crisis, European crisis. It's all just a bunch of talk, and they just have to hear themselves and justify why something's moving the way it is. Now, gold had been, nice rise within here, but we ended up with a little bearish push right there that we'll have to reverse. But now, with the fact that it's moved more towards the sell signal here, potentially that could be bullish for the market. And you would think that gold would have risen a lot more given the volatility. It just shows you that it's really not that extreme. We'd seen a nice rise in SLV with its readings, but every time it got close, the pivot was always to the negative with the cyan here going above the green, and that is why it just stays within two little branch lines here, and not going to change until usually the third one of these that comes through forms like a little Argyle sweater type thing, and that third one is usually the winner of the battle. X was interesting because it had put in at the very start of the day, was marking this magenta candle, which is when you have the cyan here coming from underneath. The green dips below, so bears have overtaken the power of the bulls, as well as they've now moved past the red and white, which is a broader stanchion of, say, larger institutional setups. And once that begins, the cascade is usually pretty good from there. Guys on our Skype chat call it the DOC spread, and once it begins, usually you get a nice, like back over here, the breakout starts and it peels away, and you form this big gap between the two color setups, and price gets ugly. Now in this case, you still have the steel down low. Steel would have to shoot up to really create a broader separation at this particular point. Still looks decent on any pivot back up. Just pointing it out. Here I marked it very clearly with the box because you can see where it begins. So it started back up here from our purple, and we went over it. Usually takes a couple bars for it to start doing its thing, and then once it got in there, we get the deep red. And once you have the little pop up, and that's the next thing that I'm working on the program will be, so that we get these little false spiders, as I call them, where it pops up and then reverses back. This one took place exactly also at a positive extreme and faded off pretty quickly, but rising extremes. Rising green, rising red in relation to the previous down pivot. This just needs to take out this previous high. It's at negative 1104. We're to like negative 1180. If it moves above that, then this should propel itself nicely to the upside. Now let's look and see, because I talked about daily that we were expecting this to stay kind of a flat day, test its pre-market highs. So what happened? Well, let's go over it from the intraday. Okay, turning to the intraday, here we go. So we started off the other day's video. Nice little cyan pop. I was pointing out here with the red arrow. It was a great short opportunity because we had the rising cyan, that it was just a great chance. That was like midway through there. That was an easy short to start the day, and boom, did we plummet from there. Developed our red and stayed in a pretty big gap, and that's where I marked these with the rectangle. So you can see the spacing between the two colors, the steel and cyan staying above and the red-white moving lower. You had your first opportunity where it kind of changed right there, gave a little bit of a pop, but immediately did a little spider. That's the next series. You can see we got kind of overbought, and that's going to be a tie-in with dictating which ones of these will be spiders, and so they won't even turn green. It'll stay red. That's just additional programming language. You can see we ended up nice little buy setup there, but got overbought, and you can see that a little bit difficult to see right there with the conversion of lines, but the cyan came below the red and white, moved back above it. Also, the green started dipping below, and boom, that was the cascade that came lower. Got a nice little reversal buy with that setup there, and then we popped up to the higher level. Well, fine, that was a pretty easy read, and so what I did was something you don't see me do a lot of. I pulled out my Fibonacci retrace calculator. What the heck? What is he thinking? Well, I'm not really looking at it for any of the lines, just generally where the 50% was, and that was right about the 1820 range, plus or minus, doesn't really matter. That's not the point. The point is what you're looking for in this case is institutions love to buy that 50%, and what they'll usually do is they want to take it out so that they can remove any of the buyers here that are weak hands and see how much supply there is. And when they test that, they'll start to buy it back, and if you don't get back above to the highs, it's usually a problem, and really was an even bigger problem here because you can see from our lines, we never got a reunion of the three sets of lines. You never got that crossover that gave you the bullish, configuration to move up. And I warned everyone at that particular time that if we did not hold at this particular level, not only were we going to come back down, we were going to take out this low and make a new low on the day, which to some people seems shocking. But we'd gotten positive extremes with each of these moves, not to mention we didn't get any of the follow through, holding up of the red and white along the decline area. And once the cascade started, you really don't even have to worry about it. You had one little false attempt right there. Was another opportunity to short, which I'm happy to take advantage of that. And cascade lower, break the lows to take out any of the people who bought on the day at all, wipe them out, and shorts then took that as an opportunity to cover a little bit. And you can see the rising green pivots in here, so that's actually looking a lot more bullish. You dip down right there, that's actually a very bullish sign from the 5,000 tick. So that's the version of Fibonacci's, not to be used for anything. Now, if you have the indicators, sure, you can look for pivots up and take advantage of those, but they don't represent, because you can see you popped past the 61%, then you dipped back below it. It wasn't really resistance as much as you had just reached a peak and you didn't develop enough power from buyers to propel yourself past the overwhelming sellers in the cyan line here, and that's why it turned around, not because you reached a so-called 61%, even if you took it off that, because then what I'll end up getting from people is they take it, okay, it's like headed here, and then they'll move it to that point, and they'll say, oh, it hit 61%, retrace that one. But then what happens? And they draw extensions from here to see, what percentage that it dropped there. But then you have someone else who'll draw it from here. Again, it's back to 61%. It's not really, but okay. And you can do that all day long, but it doesn't give you any probability as to which ones are going to hold in that. And the reality is we can see it from our indicators that once that cyan moved above here, no, not going to stay. And you've got the split that's developed, and that's going to have to close off again in order for it to be a buy. So it just makes more sense using the actual buyers rather than pretending with some lines, because even in your trend line buyers and things like that, they keep adjusting their lines as it goes. Because you'd be moving it up to here. Well, then it broke below. No, then we move it over to here. Then you move it over to this one. And it's always easy to do this stuff after the fact. But again, a line is not a buyer. Never has been, never will be. But enough of that preaching. Let's go on to look at some of the alert charts. All right, back to the alert charts. It's worth looking at because I'm going to be gone Monday and Tuesday. Going to go play with the Pope down in Rome for a little bit, see how he's doing, and then he gets busy on Wednesday through the rest of the week. So leave him to do that, and I'll be back up at Florence. But it's a good opportunity to come down and say hi to him. So we're going to do that. So you've got today's report. I will be out Monday the whole day and Tuesday the whole day, but you'll have a report for Wednesday again. So tiny little break, and I will check in. I mean, obviously I can check from anywhere, so it's not a problem. But let's look at some of these alert charts. Obviously, you have the intradays that are already available on the website page that I put on the private Twitter feed. But look at the daily. Nice to know. Apple, ugly. Nice to short all those pops. You just started with deep dark red on this move. Nice separation. That's going nowhere. Amazon likewise has been in the deep red, so we said short any of these pops with impunity, and sure enough it broke down to new lows, and you can see the separation there. It doesn't require me to do much of anything. You can see the gap. In fact, let me draw it for you right there. That's the spacing between them. As long as that's there, it's still going to keep moving lower. We could see it moving lower from there. Google had a decent chart, but turned ugly now. It's got overbought right up in there when it turned yellow, and then created the spider very early on, and you can see that it just cascaded lower from that particular point. No shock with that. Netflix has been ugly since the beginning of time. This was the easiest chart in the world. Deep dark red very early on up here, and stayed that way until just recently. But even with the pop again, oh my goodness, I love it. We can just draw these rectangles on here. Click it. There it is. Boom. And you just wait for your items to come fill in there. I mean, it doesn't get any easier than that. So when you get your intraday charts, if you have a long, you better take it and run. If you have a opportunity where it's a pop-up, you can then go ahead and turn around and short as soon as you get your signal. Now, do you have to short shares? No, you can buy your put and be happy with that. But don't hold on to a call and say, oh, well, yeah, why did it go down? Well, because you're seeing these dailies and the pressure that these stocks are under in some of the areas that they have to head back down to. For PCLN 1137, no doubt in that one. Again, nice spread from there, no improvement. In fact, I should just leave these rectangles in here so the next time I show you the charts, there won't be any question. Now PCLN, you can see there's a little bit of a divergence because you get the red rising. If it gets over this peak, it could be a nice turnaround. So the potential for a new buy setup is developing quickly. We'll probably see it on the 15-minute earliest. You've got rising extreme. So it's not going to take much to turn that one around. Just we're expecting it to come. It didn't even have to retest this low. It's just given the separation of these readings, you expect it to just continue to fail any upside pops. Likewise, we'd seen Tesla in that, and look at that spread. We saw it develop back over here on the green, so we knew that wasn't going to last very long. We thought, okay, give it a shot. Maybe it's going to turn around, and no, started ugly, and boom, that is a huge wide spread. That is not going to change either. Let me slide over so I can get my rectangle out. Yeah, I know. I need to develop two rectangles. I have to put a little rectangle and now a bigger one because it's gotten so much wider for its spread. Twitter, another piece of cake. I mean, here you can see it turned green from the original DC paint, but under our new deep dark red paint bar, understanding that none of this was going to be bought up with that deep red and staying this far apart. In fact, that is a huge rectangle we can draw for this one. It goes all the way back to here. Now, what more do you want than that? I mean, that just makes it so simple visually to even see. Even if you want to get a little more precise with it and narrow it out, you can go between the 0 and the top of the -7 there, and you can see the closest you came was right here. Nothing. This one got even further away. Hey, get back up there. There we go. And now you're below the red line, so no help from Twitter. I will look at Baidu while we're here. Yeah, not as bad. I mean, it's same spread, but a little bit narrower. Not as wide, and you get the nice rising red. So this one has the most potential for turning around to the upside. I mean, it's not going to take much for a move down there and squeeze that in place. You did make lower pivots coming off of your -13 divergence here, but still under some pressure and near overbought. As long as that spread's there, not counting on much. FAS, beautiful short signals came with this one. Deep red there. Kind of a mixed bag here with the steel dipping lower. Kind of split that up a little bit, but then it moved back into order just recently, and you can see the negative numbers that developed right there. So your square would start right there, and in fact that's continuing down, hasn't even flattened out or made an attempt to turn to the other side. So let's look at Facebook. It's another one we've got on our list. And likewise, now see, this was very close. It could have turned the other direction, but no. Moving higher, and that split it. Also was overbought at that particular point. And boom. But rising, this is an easy one to turn around. So you're looking for potential for the long side. Your Facebook probably has one of the better shots at it. Ironically, some people would think that that's nuts, but you just look at the numbers. You need to see that steel get out of this no spark zone, because that no spark zone, you just tend to get sideways action. All it is. So pretty straightforward. You're not going to have me around for a couple of days, but this gives you an idea of what to look for and how to take advantage of those opportunities that present themselves. We can see that some of them are making a turnaround. You can always revisit this and view it at any time, and I suggest you do that so that you can stay on top of things. I will continue to monitor things. The alerts will still go out just fine, so no issues with any of that, and I will catch you back from Rome. As always, trade well. We'll talk again soon.